Hi, this is Sadiq Adesha, Chief Investment Officer for Sun Life Global Investments. During these strenuous times of extreme market volatility, it is important to put events in context and take a longer-term perspective. Setting emotions aside, clear heads and rational thinking prevails, and it becomes possible to shift from fear to opportunity. Join us in our Quick Take series, where we look at the impact of COVID-19 across various world regions and discuss how our sub-advisors are responding.
Hello, I'm Michael Wu, Investment Product Manager at Sun Life Global Investments. Today is March 17th. I'm joined by Product Specialist Scott Edgcomb from MFS to discuss his view on today's market environment and how the Sun Life MFS Low Vol Global Equity Fund is positioned in times of heightened volatility. Scott, can you tell us about your views on what's happening in the markets?
It's certainly an interesting period of time as more and more information becomes available on the spread of the virus. And then the second and third derivative effects become apparent, whether it's energy prices and rates going lower or the different responses from local and federal governments introducing new policies and procedures. As a firm, our analysts and portfolio managers have spent the last couple of months doing deep dives on the supply chains and end markets for the companies we already own, might consider, or would want to continue to stay away from as the landscape changes. The market's constantly trying to discount new information and hates uncertainty. Many of the wild swings we've seen over the last few weeks have been due to too much new information and very little certainty around the ongoing situation. We remain focused on the long term and investing in high quality companies with relatively attractive valuations, companies who exhibit those fundamental characteristics while also trading with lower volatility than the overall market.
Have you changed the positioning in the fund?
As far as recent positioning changes, the low volatility global equity portfolio is already designed to experience roughly 30% less volatility than the global index. It aims to accomplish this by avoiding the most volatile securities around the world and then combining MFS's quantitative and fundamental research inputs to identify stocks with the most attractive risk-reward prospects. During these volatile periods, the incorporation of the fundamental research inputs has been critical, as those tend to be more forward-looking and can generate more signal during what appears to be an inflection point in the current cycle. Portfolio manager Jim Fallon is constantly evaluating the landscape and implementing changes in positioning where appropriate to keep the portfolio best positioned to weather the current turbulence. Much of the recent conversation has been about the last few weeks, and while the level of uncertainty remains elevated as new information comes out, we believe having a long-term perspective and staying consistent in our approach to manage the portfolio will benefit clients over the long term. Despite practicing social distancing and working from home, we are in active communication with our team of global research analysts as well as our experienced, dedicated traders to stay on top of the risks and opportunities in the fund. We'll continue to look for companies best positioned for the long term based on sound fundamentals and seek to avoid the urge to let our emotions get the best of us as markets remain volatile.